Alright guys, so in this video, I'm going to show you how to master breakouts and breakdowns. I'm going to cover what breakouts and breakdowns are, how to trade them, things to look for, and I'm going to walk through multiple trade setups that show strong or weak breakdowns or breakouts. So breakdowns and breakouts are extremely important in trading, so I'm going to give you a lot of different examples in here so you understand. So this is going to be a long video and a long lecture, so just stick with me and hold on tight until we get through everything, right? Now, first and foremost, what are breakouts and breakdowns? Okay, breakouts and breakdowns is when the price goes through a critical level such as support and resistance. So in this situation, this is a breakout and this is a breakdown. Okay, once again, this right here is a breakout. This right here is a breakdown. Now the terminology doesn't really matter, but the whole idea is when a stock breaks out, when the price breaks out of a critical level such as resistance or support, that is known as a breakout or a breakdown, right? Now these are extremely important in the market because obviously a lot of people trade them, but a lot of people trade them the wrong way, guys. So what we're gonna focus on is we're gonna focus on mastering them, knowing how to properly trade them so we actually become better at trading breakouts and breakdowns, right? So now this is a breakout. So if you guys look at the price chart, you can see stock gets rejected, stock gets rejected, stock gets rejected, stock gets rejected, and then boom, it breaks out. Our job is to identify strong breakouts or obviously strong breakdowns, because once we do identify them, we give ourselves a high probability on making money or being right on the trade, right? Now, this looks very simple. A lot of people might say, well, that's all I have to do. That's very easy. I can just buy the stock here and I can make money. Well, that's the problem with breakouts and breakdowns, right? The problem is a lot of people think it's very simple and a lot of people chase these moves. Since they chase these moves, there's a lot of fake moves that trap people in these breakouts, right? So we're gonna understand how to not get trapped into that. Now, before we do that, let's understand breakout movements. Now, there's three types of breakout movements. The first one is the initial break. This is when price breaks a critical level. So in this situation, the critical level is the resistance point. The stock price breaks out of that critical level. Sometimes you might have a break and a continuation. Sometimes you might have a break and you might get the first pullback. That's the second part. Once you get the first pullback, a few things may happen on a breakout. Stock breaks out, pulls back, continues, which is a continuation break, or the stock breaks out, pulls back, and then dumps. Or sometimes the stock goes up and just dumps, right? We want to be able to understand what's happening or what will most likely happen based on the breakout. And there's a lot of few factors that we need to consider as traders. Number one, how is this stock breaking out? Number two, what happens on the breakout? Is it a strong breakout? Is it a weak breakout? Sometimes, even if it's a strong breakout, the stock might retest the support level. If it retests the support level, we can read if this is a strong retest or if it's a weak retest. If it's a strong retest and we see buying pressure stepping in here, we now have high probability that the stock may continuously go up. Now, if it's a weak pullback, right, and it doesn't have a lot of buying pressure on the upside, this could just sell off. Right, so understanding these is very important. So I'm going to show you guys some examples. Right, now this right here is a strong breakout. What makes this a strong breakout? You can see stock gets rejected, rejected, rejected. Every time it gets rejected, you can see buyers are stepping in earlier. Buyers are stepping in earlier. Buyers are stepping in earlier. So because of that, the move from here till the critical level gets smaller. Now, what do I mean it gets smaller? Now, there's a difference of a stock going from point A to point B, and there's a difference of stock going from point A to point B, right? Now, the difference is, in this situation, if a stock goes from point A to point B and let's say makes a $10 move up, right? The stock needs to take a break, guys. Here, if it breaks out, you have a higher profit situation. You have a higher profit situation because it just broke out. Stock still has room to run. In this situation, it's been running. It's broken out at the critical level. So this would make it a weak breakout. So these two would be two different scenarios, because in this situation, if the stock was to break out, I'd want to see a pullback. In this situation, it broke out. I can either enter here or I can maybe wait for a pullback later, but I'd be okay with entering here. In this situation, I wouldn't enter here because now I'm just chasing, and I'm pretty sure people that have traded have been through situations. You see a stock going up, going up, going up, going up, and you're like, oh man, I don't want to miss out on the move. I don't want to miss out. And then you buy, and then boom, you sell, and then it continues, right? So reading that is extremely important. So this is a strong breakout, right? Now, if you take a look here, strong breakout. If you didn't enter there, you wait for the pullback. In this situation, to pull back, sometimes it won't pull back. Sometimes it'll consolidate, and that's where chart patterns kick in. You can see this is a bull flag. Stock goes up, pulls back, continues, right? Sometimes it may not pull back, it may not retrace. Sometimes it may just consolidate and then continue, right? Now, if you take a look here, this is a weak breakout. I would not be comfortable in buying here. I'd be comfortable if the stock either pulls back, retests support, or it consolidates. Buying the stock here is me chasing because I don't know when this is gonna dump now, right? So understanding that is extremely, extremely important, guys. Now, there's two types of breakouts. Number one, we have something called a continuation breakout. Continuation breakouts are when a stock is moving in one direction, it takes a breather, and then continues. The second type of breakouts are reversal breakouts. Same concept. Stock may be going on a downtrend, consolidates, and then finally reverses, right? So there's two types of breakouts, two types of formations. One is a continuation, one is a reversal. Continuations are extremely easy to play in my opinion, because if you already identified that a stock is moving on the downside, you can see that it's taking a break, and all you do is at that point you identify critical levels and you look to take a trade there, right? Same thing here. Here it's a little bit harder because sometimes you might get trapped and then it dumps again, right? And I'll show you guys examples of what I mean in a bit. Now, these are some questions you should ask before trading breakouts or breakdowns, right? Every question on here is extremely important. Number one, what does the higher time frame, such as the daily chart, tell me? For example, I might look at a 5-minute chart, and on the 5-minute chart, I might see that a stock is going up. But if I go to a daily chart, or let's say I go to a 30-minute chart, a higher time frame, what that chart might tell me is that at this level, let's say we call that 10, at $10, there is a critical level, there is a resistance point. So if there's a resistance point, this may not be a strong breakout or strong move up because the stock is going right into a critical level. What tends to happen with a lot of people is when they look at a smaller time frame, they might see something like this. The smaller time frame may show you this breakout. But when you go to a higher time frame, right, like a 30-minute time frame, and this is why you guys should do your multiple time frame analysis, you might see that there's a very, very strong level right there that was being shown for the past few days, and obviously today, stock is right there. Since the stock is right here, you think that it's breaking out, but in reality, there's a major critical level, major resistance point that the stock is going into. So if it was to break that, that would give me a higher confirmation of maybe taking on the trade. So you always want to look at the higher time frames, and you want to obviously syndicate the trade idea, which is why doing multiple time frame analysis is extremely important, guys. Next, where is the next critical level, such as support and resistance, right? As I just explained, if you are trading a breakout, where is the next level of resistance? Where is the next level of support? Identifying that is extremely important, which is why going to a higher time frame will allow you to see the bigger picture. Next, is there a widespread or is the stock extremely volatile? Now, this is very important when you're trading breakouts, and a lot of people don't talk about this because I guess they just don't understand the concept, but this is extremely important. Now, if let's say a stock is trading from let's say a stock is trading at $4, okay? Now, if a stock is trading at $4, the bid is, I don't know, at 4, the ask is at 450, right? There's a 50-cent spread. There's a 50-cent spread between the stock. Now, the stock may be at a critical level of $4.10. This is $4.10. That's a critical level. Now, since it's at a critical level, now it's having a hard time breaking 410. What might happen is sometimes the stock may go to 425 and you might say, oh man, this is a strong breakout. No, someone probably processed a market order, and because of that, the stock made a move up. It made a huge move up. And once that market order is filled, the next market order, boom, it's a failed breakout, right? And that's one way a lot of people get trapped, because some stocks have a huge spread, and that spread causes the stock to be extremely volatile, or it causes extreme price movements on the up or down side. So obviously being familiar with or knowing what stocks you're trading is extremely, extremely important. Next, how is the run up or run down into the critical level? Now, like I showed you in one of the previous examples, however the stock runs up into a critical level, that showcases us a lot. There is a difference, guys. Once again, pay very close attention to this. There is a difference. So actually, let me ask you guys this question, right? Let's say we have scenario A and we have scenario B, okay? This is a critical level. Now, let's say in scenario A, we have that. Let's say in scenario B, or actually let's say we have it like that. Let's say in scenario A, we have something like this. This is scenario A. And let's say in scenario B, we have something like this. If you were to take one of these trades, right, or if I was to ask you, which one do you think is a stronger breakout? Obviously, let's put volume and everything else to the side, and let's just focus on A or B. And I asked you, hey guys, what do you think is a stronger breakout? Is it A or is it B? Now, a lot of people might say A because, oh man, it pushed right through the stock price. But what you have to understand in the simple terms is think about you running 10 miles. In here, you're at mile 0. And here you go to 10 miles. From mile 0 to 10 miles, there were no breaks taken. In this situation, from mile 0 to mile 10, right, you ran, you took a break, and now you ran. So at this point, you have more room in the gas tank to continuously keep running, but at this point, you might have to take a break, which may cause a pullback, which may cause you to panic. Also in situation A, there was no profit taking. Very hard to see profit taking. Here, there was consolidation, there was profit taking, there was a break. So B is the proper answer. B is the stronger breakout because it was able to take a break before breaking out of that critical level. It consolidated, it took a breather. Part A did not do that. So understanding that, understanding how the run up or run down was into the critical level, it's extremely important. And I'm going to show you guys examples in a bit. Next, what is volume telling me? Right? Looking at volume is also a very, very important aspect. Obviously, if a stock is breaking a critical level, I want to see volume picking up, because volume picking up, if a stock breaks out or breaks down from a critical level, that is showing us commitment. And us seeing commitment is giving us a higher probability that the play might go in our favor. So volume is an extreme point, right? I want to see what volume is telling me. Is there volume? Is volume dying down? What is happening that's giving me a high confirmation? So these are questions to ask before breakouts or breakdowns, before they fully happen as the stock is hitting the critical level or approaching the critical level. What is happening here? Does it look like a strong move into the breakout area? Does it look like a weak move? So these are questions you should ask yourself, right? Next, the questions to ask during breakouts or breakdowns, right? Was there volume on the breakout? So if the stock does break out of the critical level, was there volume, right? Very important to see that. High volume showcases strong commitment, low volume showcases weak commitment. This is where false breakouts come from, right? Also, on the break, you want to see the candle. Watch the candle formation to get an idea behind the move. Guys, there's a difference of seeing this breakout and there's a difference of seeing this breakout. Which breakout is stronger? Obviously A, right? A is stronger than B. B is not showing us strong buying pressure. Even if B has high volume, does not matter. A with high volume is going to give us a higher confirmation that the stock is breaking out. Now, if I see B and I think it's a breakout, I wouldn't be a buyer until I can see the stock kind of break that level. I'd want to see that. Okay. Next, is there any supporting catalyst? Now, sometimes if a stock is going into resistance and it's flying up, I want to obviously see, hey, why is the stock running up? Why has it been running up so aggressively? Is there any catalyst? Is there any reason? Is there any news that came out from the company that's pushing the stock up or down? And that will obviously support that movement. And next, you can watch the tape to get strong breaks. So if, let's say, a stock is around a critical level, one thing I like looking at is I like looking at the tape. I like to look at time and sales. I like to look at level 2. I like to see, is there aggressive buying or aggressive selling happening? And that allows me to catch certain pops up or breakdowns on the downside. So I like looking at the tape, and obviously, like I mentioned before, this takes a lot of time to get good at. So let's go over some examples and let's break it down. Now, if you guys take a look right here, this is a congested area. So if you take a look, resistance, resistance, right? During this resistance area, stock gaps up. Why does it gap up? Because the company has earnings. It makes a huge move into 210. As it makes a huge move into 210, you guys can see what happens. Goes into 210, takes a break, pulls back, consolidates, goes into congested area, gets tighter and tighter, and then boom, breaks out. Now this breakout, if you look at it, happened on a daily time frame, right? So a daily time frame breakout would allow you to play the move a little bit longer, okay? In this situation, you can see the breakout happens, stock gaps up, strong move, and the next day, breakout continues. Even volume, if you guys take a look at volume, volume these days also picked up, right? So that's showing us a strong move up. Now, continuing with this, breakout, takes a break, critical level, breakout, another trade, makes a move up, right? So understanding that concept is extremely important. Now, looking at another example, right? If you guys take a look, let's say you guys take a look right here. Now look at this. There's a huge difference of this move and there's a huge difference of this move. The difference is in this move, guys, you can see stock moves up, pulls back, area gets congested, boom, it breaks out. In this move, stock is just running up, running up, running up. And that's the same example I just gave you. Imagine you're running from 0 miles to 10 miles. In this situation, you ran, you take a break. Now you can run more, you take a break. You can run more, you take a break. Here, you ran and you kind of surpassed your limit. So it's very hard to see this continue. I wouldn't take my chances on seeing this continue. I would want to see this go here, pull back, and then break out. That would give me a higher confirmation. Now, if I see something like this and I see a pullback, I now want to see it break that level. That would be my level where I'd want to enter. That would give me a higher confirmation. So seeing that is extremely important. That's where being patient plays a huge role. That's why seeing how the stock is going into resistance is very important. Difference of this and there's a difference of that. So keep that in mind, guys. Now, as I show you more examples, I just want to show you false breakdowns or breakouts, right? In this situation, you can see the candle, weak candle. In this situation, strong candle, but you can see after the strong candle, you can see it's unable to break that level. Same thing here, same thing here. Strong move up, unable to break that level. Now, obviously, depending on how the stock breaks out, if this broke out, if this day the stock broke out, or this moment the stock broke out, would have given me a strong confirmation. But just seeing this candle kind of throws me off, right? In this situation, strong move here, but I want to see a continuation. I want to see the move continue on the next candle, right? So if this is a 5-minute chart and each candle represents 5 minutes, I'd want to see a continuation move, right? Here, it looked great for 5 minutes, but at the end of the day, when it was closed, when the candle finally closed, it looked like a weak move up. In this situation, strong move up, unable to break, sell off. Now, if it was able to break that and continue, that would give me a high probability. Now, that's the problem with breakouts and breakdowns. A lot of people buy right here. You have to understand, guys, market makers are setting this up. That's why a lot of breakouts and breakdowns fail, because what market makers do is they know if they set up a clean breakout or breakdown, us retail traders are going to chase, enter, buy, and then they're going to dump the stock and they're going to profit. That's where they trap you. That's where the mechanism of traps kick in, which we go over in the next lesson, right? We don't want to get trapped in. We want to be smarter, right? We want to understand the play. We want to find higher probability trades. So reading that concept is extremely, extremely important. So like I said, breakouts always don't work out perfect. There are false breakdowns or breakouts, but understanding that and looking at time and sales, understanding the run up, understanding volume, and understanding all these key points is going to play a huge role on you capturing great, strong breakouts or breakdowns, right? Let's go over a few more examples. Now, if you look at this example right here, what do you see? Support level, stock is going heavy into support. Very heavy into support without any real breaks. I don't like that. If I see something like this and the stock does break, I'd rather wait for a pullback and a continuation. If I see this, I'm not touching it, because what tends to happen is you see it go down, you're like, oh, let me get in, right? You start chasing, and then when you're chased, people get trapped, stock reverses hard, and obviously market makers and other people made money. You are the one that gets trapped, right? I don't like the way this went into support. Now, if this went into support like this, would have a higher confirmation on taking on a short position or buying puts. But in this situation, I don't really like it, because yes, it broke support, but you can see how it went into support and then what happened at the bottom here. Now, this could have played out another way. Goes down, it does something like this. If it did something like this, I would now watch out for the 124 mark and see if it can break that. If it can break that, I would now look to be a trader who would look to short the stock or buy puts. Now, here's another example. If you guys take a look here. Now, this was a strong move, okay? Now, this was a strong move because, look, stock goes up, gets rejected, pulls back, gets rejected, pulls back, buyer step in earlier, strong breakout, right? Very strong move. Now, the thing is, as I mentioned, seeing this right here is a stronger break than this. That's number one. This is by far a much stronger break. Why? Because look at the length of the move and look at the length of the level of resistance. Look at the length of the move and look at the length of the level of support. Huge difference. So in here, the stock has room to go higher. In here, the stock has to take a break. I don't want to get caught up in a break and then I panic, right? So this obviously is a strong move up. Now, what you have to understand is when I see a strong green candle on a breakout, I like to wait for a continuation move, right? So this is a 15-minute chart, right? On the 15-minute chart, yes, we see a strong breakout, but what I want to see is I want to see a level get rejected. I see 137 get rejected, and I want to say, okay, 137 got rejected. I want to see that level now break. If that level can break, if 137 can break, I will then take on the trade. And I'll show you guys examples of on the chart in a bit so you guys have a better understanding. Now, here's another example. Now, if you take a look here, stock gaps up, makes a strong move up, goes from $99 all the way to $140. Huge move up. 40% move up right into a critical level. This critical level for Roku was obviously established after it hit that level, but 40% move up, guys, in like 4 days. That is overextended. This stock made a 40% move in 4 days. This is 1 day, right? 1, 2, 3, 4. In 4 days, it's up 40%. That is extremely overextended. What a lot of people do here, they start chasing, they start chasing, they start chasing. Me, if I see a stock is overextended, I want to wait for a pullback. This is where it got rejected, pulled back. Now I want to see the stock break out. Volume kicks in, volume starts slowly increasing, breakout. This is where I'm looking to be a buyer. That's giving me the highest probability. This is not giving me the highest probability. Even though if I bought anywhere around here, I would have still maybe made money, but it's not giving you the highest probability because the stock is up 40%, guys, in 4 days. It is overextended. Pulls back, great, it held. I want to see it now break that level because sometimes a stock may pull back, right? Consolidate and then sell off. I don't want to see that. I want to see the pullback and I want to see it break this level. I want to see it break the old high. And then I want to look to be a buyer, right? Now, if you look at this side, you can see stock sells off, hits that same level, which was resistance, and now became support after the breakout. It falls right into that, right? Forms a bear flag, and then boom, next day breaks down. So stock makes a strong move down, takes a break, boom, strong move down. After the first strong move down, it takes another break. You can see the green candle, that's taking a break. And then that break allows this stock to take a rest and then continue. And look where it continued to, guys. It continued right to our critical support level of $99. The same level the stock rallied from 40%. That's why having your critical levels established accordingly is extremely important. And you guys can see that in effect right here. And then same exact thing, hits that level, takes a break, consolidates, and then obviously goes right into that congested area again. At the moment, right now, what the stock is showcasing, if you guys take a look at it, made a 40% move up again, and it's doing something very similar that it did here, right? It makes a 40% move up in about a month, right? And now if you look at the chart patterns we covered, boom, bull flag. If it can continue and break 139 or 140, we could possibly see a strong move up. Seeing that, analyzing that is extremely, extremely important. Here's another example, guys. So if you take a look here, resistance level on Tesla, we're on a 5-minute chart. Stock goes into resistance very strong. I don't like that. Pulls back, holds. Okay, phenomenal. Boom, breakout. Volume is increasing. Gives you a strong confirmation right there for you to take on a trade, right? Here's another example. Boom, stock sells off, consolidates, sells off, takes a break, sells off, right? This is giving me a higher confirmation. Now, if this stock from this level and this level, if it didn't take a break, I wouldn't be comfortable in buying puts or shorting the stock here. Right? I'm more comfortable because I was able to see stock goes down, buyers are holding, sellers take control, buyers are holding, sellers take control, right? And this is a 5-minute chart, so obviously these are going to be quicker moves, more day trading moves, but just reading that and understanding that is going to give you a high confirmation. Here's another example, right? You can see what happens right here. Stock breaks out of this critical level, consolidates, gets congested, and then boom, dumps. That allows you to go short. And this is a descending triangle, one of the chart patterns that we've covered. Right, here's another example. Stock goes into resistance. Look how it goes into resistance. Pulls back, goes up, goes into resistance, pulls back, goes into resistance, pulls back, goes into resistance. Now this is where it gets tough. Sometimes when a stock breaks a critical level, it's not clean breaks. You might see a lot of wicks and a lot of price movement and the area becomes very congested. When or if it becomes very congested, I personally like to wait and see the stock get out of the congested area, meaning right here. That would give you a high confirmation on buying the breakout. The breakout here would not give me the confirmation because it's still congested. This level would give me the confirmation because it is out of the congested area, right? Now, the question a lot of people have is, how do I find potential breakouts or breakdowns? So you look for a trending stock and then look for pullbacks. So if a stock is trending, right, you look for pullbacks, right? For example, like stock Roku went from 100 to 140 in a short period of time. The stock is trending. Wait for the pullback. You can either buy on the pullback or buy on the continuation. Next, find stocks that are consolidating or trading sideways and watch out for a break of resistance or support. So if a stock is consolidating and let's say it's trading sideways like this, I'd want to wait for that level of resistance or support to break. Obviously, I'd want to see a break like this opposed to seeing the stock just run right into resistance and then maybe fail, okay? And then finally, when you are trading breakouts or breakdowns, always start with a higher time frame, guys. Always start with a higher time frame, such as a daily, and then work your way down into intraday. So if you're day trading, do not just find your critical levels in day trade on an intraday time frame. Look at a larger time frame and then work your way down. And if you want to go back to the multiple time frame analysis part and check out the video and then apply that and combine that with breakouts or breakdowns. So now I'm going to jump onto real charts and I'm going to walk you through plays minute by minute just so you can see it happening live. All right, so if you guys take a look right here, we're on Facebook. We're on stock Facebook 5-minute chart. So if you take a look right here, we have a critical level at 184, right? So I'm going to go to 184 and there's a nice critical level, a support area on 184. So I'm just going to apply that, and obviously I'm not going to go into a larger time frame and break everything down step by step, but I'm just going to show you what you need to identify in seeing strong breakouts or breakdowns. So we have a very strong level at 184, okay? Now when we go to the most recent data, and I keep going minute by minute or every 5 minutes, you guys should be able to see something. When we look right here, you can see that the stock is going right into that support level, right? Now, obviously the stock is selling off, which is a good sign, and it's going right into support. Strong volume, everything looks great. But now what I like to see personally is I want to see the breakout be strong. I want to see it get below that area. Now, if it goes below 184.5 or 184.4, that's not giving me a strong breakout or breakdown, right? So if you look at the next candle, look at the next candle. Now this next candle, and that's where reading candles plays a huge role, is obviously what we can see is the stock went down and bulls are trying to pick the stock back up. Bulls are pushing in buying pressure. Now, whenever there's a low made or whenever stock breaks a critical level, what I like to do is I like to establish a mental level, a mental support level, especially if I'm trading on a 5-minute chart, especially if I'm using an intraday time frame. On that level, I want to see the stock break that point now. Watching that, you can see what's going on. You can see that at this level, buyers are stepping in. Buyers are holding. Now, what a lot of people do wrong is they step in and they start buying. Or another thing that may happen, and this is what we don't want to do, is people see this and people either buy puts or short. They're like, oh, it's going to break down. And then the moment they see this, they're like, oh man, what do I do? And they start panicking and they exit. We want to be a little bit more patient. We want to be smart. We see that the strong move down was made. That's number one. We see it wasn't able to break this level. We see it's consolidating and taking a break. Now we know that if it is able to break now again, that will give us a strong drop down. If it can break that, where would I look to be a buyer? I'd maybe, if I was to buy, would maybe look to see it break 184.5, 185.4 or 185.5, see it break that level before I'm a buyer. But up until then, I would not be a buyer because right here, there's an extreme critical level. So I don't care what it does in between, right? I don't care what it does in between this area. I wouldn't be a buyer until it can break that point, and I wouldn't short or take on a trade unless it can break below that point. Because in between here, it's ranging. Now we keep watching. Boom. That strong move on a 5-minute strong candle is giving me the confirmation to buy put or take on the trade. Obviously, you want to see how much lower the stock can go and look at other factors, but we're just focusing on critical levels and the stock breaking out or breaking down from it, right? Giving you a confirmation. Look at the next candle. Boom. Same exact thing. Next candle, buyer step in. Now, if I see something like this, I'm not taking on the trade. So let's say we missed this entry. I am not entering here until I see it gets below there with a strong push. And if we keep looking, boom, you can see same exact concept, right? Same exact concept. Now, if you look at this concept, the same level, just watch that orange line, okay? Watch the bottom orange line. See how it breaks out right here? That same level, 180.5. Let's say you missed this whole move. You kept missing it, you kept missing it, you kept missing it, you kept missing it over and over again, right? Which is fine. You're like, oh, I want to capture the next one. Number one, the stock extended down already very, very much. Now, obviously, can it go down more? Maybe it can. I don't know. But I'd want to see the critical level. The critical level now is established at 180.5. Buyer stepped in. You can see what happens. Again, boom. Right at that same level, right at that same area, the stock went up. Now, I'm not saying it's reversing, but you can see there's a lot of buying pressure at that same exact level. And then once it breaks that level, right, if you take a look, once it breaks that level, it now gives us a confirmation. And if you look at the level, once it gets outside of that range, breaks, retest, flushes down. Now, you have to understand, this is a 5-minute chart, guys. When you're trading on a smaller time frame, on a 5-minute chart, the play might last 30 minutes. The play might last 15 minutes. Sometimes the play might last 2 hours. But you have to be able to read that very, very quickly because this is on a 5-minute chart. All right, so here we're looking at stock CHGG, okay? Now, when you're looking at this stock, same concept as I mentioned before, you apply all your levels of support and resistance just to get a solid idea of the play. Now, if you look at this stock, we can see that the stock is selling off, heavy sell-off. Now, what a lot of people do is they chase. They go, oh, the stock is selling off, let me short or let me buy puts. No, I like to wait. I like to identify my critical levels. I like to make sure I can see the big picture before I take on the trade. Now in this situation, one way I'd go about it is obviously I'd want to apply my levels. I see that the stock is trading here, so I care about all my levels around that point. So when I go around that point, right, what do I identify? I identify that around $33, right, you guys can see resistance, 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 pullback, breakout, pullback, right? This was a very strong breakout, by the way, if you guys see. Nice run up into the stock. Pulls back, continues, strong breakout, okay? Going into this again, the stock is going right into support. We're facing a very, very strong support level. If you guys can notice, once again, very strong support level. Stock is at 34, right? Now, what I would want to see is if this stock, A, breaks through 33, I'm not comfortable. I'm not really comfortable in taking that trade. What I'd want to see is I'd want to see the stock maybe consolidate before continuing the move down. So let's see what tends to happen. Stock goes down, bounces up 33, moves down a little bit. I wanted to get away from the 33 area. You can see it's holding, right? Keeps moving, and now look what it does. It bounces. Stock falls heavy, takes a break. Now if it breaks the 33 level, it would have a stronger move because majority of the move was already done in the first move down. The second move down has a lot of room to move down if it can break the 33 mark. So I watch that to see what happens. Boom, that is giving me confirmation. And you can see it keeps selling off, does a retest, right? And it's trading on a current level right now. And then obviously you can go down and try to see what levels it bounced off, what actually happened. And you can see it's at a critical level, bounced off that critical level, and is now retesting this 33. Now obviously if the stock can break 33 again, maybe I would look to be a buyer, but what I have to consider is I have to consider that the stock has earnings coming up soon. So they have earnings coming up next week. So obviously I'm not going to trade this. Now, if they have good earnings and the stock moves up, it changes the sentiment, which I'll break down. If it has bad earnings and the stock goes down and breaks 30, I might possibly look to short. I'll dive into the sentiment and earnings once we get to it. But at this point, I wouldn't look to trade the breakout, or I wouldn't be attracted to it because there is a major news event coming up. All right, so here we're looking at stock Tesla on a 5-minute chart. You can see on a 5-minute chart, Tesla goes from 246 to 251. Strong move up. After the strong move up happens, Tesla then starts pulling back. Now, as it starts pulling back, you can see on the next few moves up, what is happening with Tesla. Tesla is breaking out of this critical level. Now, the problem with this breakout, right, and this is where you have to be very focused when you're trading, is that this looks like a strong breakout, which it is in a way, right? But what a lot of people do here is a lot of people are buying here, right? Because, oh, I broke the last high. I need to get in, don't miss out on the move. And people start chasing, right? Smart money is offloading here because they got in, and the stock made a strong move up, right? Now, the problem with this is that this ran up very, very strong. Obviously, it took a small break here, but it still was a very aggressive move up. Now, the problem with these type of moves is if it does break, I like to see it pull back. Now, this would be a completely different move if it went something like that. So in this situation, a lot of people are chasing. They're chasing the play. They're entering. They don't want to miss out. It goes up higher. More people are jumping in, right? This looks very good. I like the volume. I like everything. But the only thing I don't like is that the fact that the stock is going to need a break. So I'm not really comfortable in touching that, right? Obviously, it's a little bit different if the stock made a stronger breakout, something like that. So I like to wait for a pullback. I see the pullback. I see this happening, and I'm like, okay, good. It's showing me that sellers are stepping in. So at this point, sellers are stepping in. Bears are stepping in. Good. I want to see bears step in. I want to see them step into the play, and I want to see them push the stock down. The reason I want to see bears step in and push the stock down is because if bears step in, it now shows me if they are stronger or if bulls are stronger, because now bulls are putting up a fight with the bears. So there's competition going on with them too. And I want to see that competition. I want to see that fight because it gives me confidence. It gives me confidence because if this stock goes higher, I now know that the bulls were challenged, right, by the bears, but the bulls were able to overcome, which shows me their strength, right? So that's a good sign. I like seeing that. A lot of people see that and they panic. I'm not in the trade yet. Right now, I'm liking this chart a lot. I'm really liking this chart, but my entry does not come in until it can break that point, okay? Now, as we progress, boom, look at that. Huge move down. It's fine. Maybe it may be a pullback, right? Maybe it's going up, pulls back, goes up. I don't know yet. So I keep going. And you guys can see, there you have it. Same exact level, and you just got saved from a weak move up. You just got saved from a trap. That was a trap where a lot of people get trapped in. Like I explained before, market makers are setting this up for retail traders like you to get caught because they understand when you see this, you're gonna chase, right? Smart money is maybe got in here and they're offloading here because they know dumb money is entering around here. Dumb money is taking it off their hands. So being smarter is you waiting and continuation at this point. But once again, if this was a different move and it was something like that, I'd be comfortable in buying, right? So very important to identify the difference between that because that's going to save you guys from a lot of bad plays. All right, so here we have stock Baba. Looking at a 5-minute chart. Once again, like I mentioned, when you are doing this exercise, when you are applying or finding critical levels, always start from a higher time frame. I'm not starting from a higher time frame right now just because I'm trying to show you the breakouts and breakdowns. So looking at this, we see a strong sell-off. If you miss this move, please do not chase. Wait for the consolidation. Wait for the stock to take a break. Stock takes a break. I establish my level. I see that the stock is holding, right? I like the range it's in between. And then I keep watching. it can break that range, that's giving me a strong breakdown. And you can see, retest the same level or same area, and you get the strong breakdown. It's very simple, guys. Do not chase this. If you can catch this and you can ride it out, great. But if you're finding it on at the end, you're seeing the play here, wait for the consolidation, because the last thing you want is you do not want to catch and move when it's all the way at the end, when it's at an exhaustion point where it's about to reverse. Because think about it. Imagine you get into a position at $10, and the moment you get in a few minutes later or right away, it goes down. You're already negative. And if you become negative right away, you know, obviously emotions step in and all these factors step in, which make it harder for you to take on the trade, and you give away a lot of profit and probability on the trade. So now I'm going to show you guys a few more, and we're going to break it down from there. All right, here's another one. Here we're looking at stock Tesla. So stock Tesla gapped up today. Gapped up yesterday, actually. It gapped up because they had great earnings, and because of great earnings, stock went from 255 all the way to 300. Right, it made a huge move up. Now, as it made a huge move up, around 305, we now have a critical level, right? We also have a critical level right over here. So huge critical levels for stock Tesla. Now, this is also where something called a short squeeze kicks in, right? So right here, there's a lot of short sellers stepping in, pushing the stock down. There's a lot of short sellers here that are pushing the stock down, and you can see this now becomes our critical level. 305 is extremely huge for us. Now, the moment the stock breaks 305, look at the break. Look at how it runs into it. It runs into it very strong. Now, when a stock runs into a critical level that strong, I don't like it. I don't want to trade something that's going into a critical level that strong. I'm not a buyer. A lot of people are chasing. They're chasing. They're like, oh, it's breaking out. Let me buy. I'm not a fan of that. Why? Because once again, very strong move into resistance. I don't like that. I want to see a break like that, okay? Now at this point, sellers are putting up a fight, which is something I like. Boom. That is now giving us confirmation. Stock moved up, consolidated, and now that is giving us an increased confirmation, increased probability that this may most likely keep going higher and higher. And if you just watch simple price action, you can see same thing happens again, right? Goes up, takes a break, and this is going over all the chart phases, right? Stock trends up, takes a break, continues, takes a break, right? Continues, takes a break over and over and over again. And what happens throughout the day? Stock squeezes. This is called a short squeeze. Remember, short squeeze is when people that are shorting are forced to exit their position because there aren't any shares available or the broker wants the shares back. So because of Tesla and the magnitude Tesla is at, Tesla has a lot of shares shorted. They have a very high percentage of shorts. So because of that, if Tesla moves up, a lot of shorts are going to cover. If they are going to cover, that is going to increase the short sellers on buying. That's going to increase buying pressure. And that buying pressure will allow the stock to go from 290 all the way to 330 in a simple day. And you can see simple price action. Run up, consolidation, run up, consolidation, run up, pull back, run up, consolidation, run up, consolidation. Simple price action. Just to recap everything, guys, trading breakouts and breakdowns are extremely important and understanding them. A lot of people trade them, but they trade them the wrong way. They get trapped. They enter here, they enter and they see red and they panic. We want to be a little bit different because remember, like I said in the beginning, if trading was as simple as buying a breakout, buying a pattern, everyone would make money, right? Market makers set up these plays that confuse us, that trap us. So we want to think outside of the box a little bit. If we see an easy setup, I want to see a consolidation and a continuation play before I enter, right? In the next video, I'm going to show you the mechanisms of traps, how market makers set up these traps and trap us, and how to actually avoid these traps by looking at different time frames and actually focusing on the candle closing and factoring in other factors, okay? So very, very important, just once again, to practice this, and the more screen time you put in with this and the more times you see breakouts and you actually absorb the information, the better you guys are going to get at this.